Welcome to Earnings Central. In this video, we'll break down Accenture's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $16.62 billion. The company actually reported revenue of $16.70 billion, surpassing expectations slightly by 0.5%. This quarterly revenue also marked a 5.7% increase compared to the $15.80 billion reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was $2.81. The company actually reported an EPS of $2.82, exceeding expectations by 0.4%. This result also reflects a 1.8% increase compared to the $2.77 per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Accenture's bookings reached $20.9 billion for the quarter, representing a book-to-bill ratio of 1.3. While this was flat in local currency compared to last year, it demonstrates continued strong demand for Accenture services, especially in strategic transformation work. The company achieved strong 8.5% local currency growth, hitting the top end of their guided range. This growth was broad-based, with 9 out of their 13 industry groups growing at high single digits or higher. This performance allowed them to continue taking market share from competitors. Looking at the business mix, managed services was up 11% in local currency, outpacing consulting services, which grew at 6%. This highlights the ongoing shift toward longer-term managed service engagements as clients seek to balance transformation with operational excellence. One standout area was GenAI revenue hitting $600 million for the quarter, putting them on pace to significantly exceed last year's $900 million full-year total. With $1.4 billion in new GenAI bookings this quarter, Accenture is establishing clear leadership in this strategic growth area. From a profitability perspective, operating margin at 13.5% contracted 20 basis points compared to adjusted results last year. This reflects ongoing investments in strategic growth areas and in Accenture's workforce, with approximately 15 million training hours delivered during the quarter. Lastly, the company generated free cash flow totaled $2.7 billion, demonstrating strong cash conversion. This enabled them to return $2.4 billion to shareholders through share repurchases and dividends, including a 15% increase in quarterly dividend compared to last year. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Perhaps the most significant development was increasing uncertainty in federal government business, which represents approximately 8% of Accenture's global revenue and 16% of America's revenue. The new administration's focus on running the government more efficiently has slowed new procurement actions. Additionally, federal agencies have been instructed to review contracts with top consulting firms and terminate those not deemed mission-critical. Despite these headwinds, Accenture secured 32 clients with $100 million plus quarterly bookings, underscoring their position as the reinvention partner of choice for large-scale enterprise transformations. This ability to secure large, strategic engagements remains a key competitive advantage. The earnings call highlighted an increasing focus on reinvention with GenAI across industries. CEO Julie Sweet shared several examples, including a joint venture with Telstra to accelerate their data and AI roadmap and work with a multinational food processing company to revolutionize their supply chain using AI. These engagements illustrate how GenAI is becoming central to business transformation. Accenture continued its strategic M&A, exceeding $250 million during the quarter, primarily across 6 strategic acquisitions. These included enhancing their Industry X supply chain capabilities with AOX and Staffen AG in Germany, and strengthening GenAI capabilities with the acquisition of Hospace in Denmark. These investments align with their strategy of deploying $2 to $3 billion in M&A this fiscal year. The company emphasized that market share gains continue on a rolling 4-quarter basis against their basket of closest global publicly traded competitors. This demonstrates Accenture's ability to outperform the market even in a challenging environment. Finally, Accenture noted that the twin themes of cost efficiency and growth continue to drive client engagements. Clients are focused on building their digital core with more AI integration, which is driving growth in areas such as customer experience, core operations, supply chain, and Industry X. Many clients are using cost savings from AI and automation to self-fund their transformation initiatives. Looking ahead, Accenture updated their full-year guidance to 5 to 7% growth in local currency, with organic growth of 2 to 4%. They maintain their operating margin guidance at 15.6 to 15.7%, representing a 10 to 20 basis point expansion over adjusted fiscal 2024 results. In conclusion, Accenture's Q2 results demonstrate resilience and continued strong execution of their strategy to be the reinvention partner of choice. While new uncertainties have emerged, particularly in the federal business and global economic environment, the company is well-positioned with its diversified business model and leadership in strategic growth areas like GenAI. That wraps up our recap of Accenture's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.